Awesome. Seamus, welcome to the podcast. How you doing?
Good, thanks. Great to be here.
Great to have you. So before we jump in and talk about METACO and all of that wonderful stuff, tell me a little bit about you, your background, stuff to kind of give my audience a better idea of who you are.
Sure. So, Seamus Donoghue, I'm the VP of Sales and Business Development at METACO. We're a Swiss-based company that basically works with large institutions to enable them to securely integrate, store, and manage digital assets. I've been in this space with the company for about 2.5 years. We're based in, as I mentioned, Switzerland, but I joined from Singapore, and previously I actually ran a Swiss crypto exchange in Asia. Um, and from all through the excitement of 2017 and 2018. But my background prior to that was really based in traditional finance. I mean, I worked in banking originally from Canada. I got into banking in Toronto, and I worked for most of the major, let's say, bulge bracket firms and wholesale trading. So I started my career at JP Morgan, Deutsche Bank, Barclays, Merrill Lynch, and a stint at a hedge fund called Bluecrest. But I think I started in the business fairly. I'm a bit of an old timer in the space. I started in 1991, and it was really basically at the advent of the development of derivatives markets. So banking, well, as much as people think, is a very staid sort of corporate space. It was exciting and new. Building new products, and the space was growing very rapidly. And in the latter part of my career, it went from when I started being very bespoke, sort of new products, and later in the career it became very much about automation and electronification of markets. And helped really drive a lot of that when I was at Barclays. At Barclays Bank, before the whole banking crisis, was one of the leaders in the wholesale trading side. It was really because they electronified wholesale over-the-counter markets. So that gave me a taste of basically what the intersection of finance and technology. And I left banking in 2011 and eventually started my own startup, very much focused on bringing, let's say, electronification and transparency to wholesale commodity markets. And that got me involved with, initial focus was really on physical gold and physical precious metals, and then looking at a broader commodity complex because it's extremely opaque, and nobody knows really where's the price of gold in India versus where's the price of gold in Singapore, where the price of gold in let's say, the United States, the different prices, even though it's fundamentally the same product. So I ran that for 4 years. It was focused on banks, but unfortunately, it was like never really had escape velocity. And instead of doing another round of funding, I shut it down. And just by happenstance, I had an ex-colleague from JP Morgan who had gone into the crypto space that asked me, why don't you come to a talk tonight? This got a visionary guy in the crypto space is talking, and you might find it interesting. There's the CEO of a company called Likke, which was a Swiss crypto exchange. I think it's one of the very early pioneers in the space. And spent the evening talking about peer-to-peer markets, getting rid of market infrastructure, no need for centralized trust. I actually thought the guy was out of his mind, but a week later I joined and ended up running his Asia business. So that was my 2017 was when I jumped. Early 2017 is when I jumped into the space, and we were an exchange. It was growing fairly rapidly, nowhere near what Coinbase was. And I think that was obviously where Coinbase is now. Likke, you probably might not know about, but along that journey, I started asking, how do we manage custody? And when I was told, well, we have 2 trusted employees in Russia in the Ural Mountains who manage the keys for all the clients' assets. So that was the beginning of a journey looking at custody. And now I'm at METACO, and I joined the company in 2018. There were 17 employees, very engineering research led, and I was one of their first commercial employees. So since then, I've really been focused on commercializing their product, focused really on delivering secure infrastructure. So you don't have trusted employees, distributed trust, and scalable enterprise infrastructure for banks to get involved in this space.
Gotcha. Well, it sounds like you have a long tenured background in finance.
It's been a few years.
Yeah. So let's
sorry, go ahead.
Oh, you're good. How do you pronounce it? Is it METACO or METACO?
METACO. Well, it depends. I mean, most of the colleagues are French, so you get a bit of different angle, but METACO works.
Okay, just trying to make sure I got it right. I'm getting all my pronunciations wrong today.
No problem.
But okay, yeah. So let's talk about METACO a little bit. I'm curious. So I've definitely dove into it and kind of researched it a little bit, but I still have a lot of questions on how it works and how you guys started it. Can you give me a little bit of detail on that?
Sure. So as I said, the company was set up in Lausanne, so the French side of Switzerland, and it was set up by 2 people as co-founders: Adrian Tricani, who's a PhD in quantitative finance, and Nicolas Dorier, who you might have heard of. He's a core Bitcoin developer. So I think they came together in 2015, and their focus was still the institutional market, but it was about tokenization. Tokenization is still a fairly nascent industry, so you can imagine how that resonated in 2015. If you were like, what is this? What are you talking about? It really sounded like something from another planet at that time. So I think not too long after that, they also figured out, well, you can't really tokenize if you can't store the coins or store the assets securely. So they actually attacked, and in 2018 they launched a product which is, you mentioned, is called Silo, which is really about kind of the foundational infrastructure for banks to be able to securely integrate and then store and manage cryptocurrencies and digital assets as whatever may come in the space.
Gotcha. Yeah, I saw Silo on the website, and I know that's one of your products. So how does that work, and who is it meant for? Is it meant for the institutions, like a platform?
Very much so. I think, if you look back really with the excitement of 2017, 2018, it was really a retail phenomenon. And all the solutions in the market, there's lots of, let's say, storage solutions or ways to manage your assets, but they're all focused on retail. And retail, you have a centralized point of risk, which is you. And there's ways you can distribute that. There's obviously more kind of, let's say, distributed retail solutions, but those solutions don't really work for institutions. You needed something that, one, could be integrated into a large institutions, and our client focus is really banks. So enabling a legacy institution to integrate this new asset class into their core infrastructure, number one, so do that securely. And then they've got fairly complex sort of risk and control frameworks, meaning they have many steps and many different people, and they have segregated duties that need to be supported. And that was basically something that also needed support, an infrastructure to support. So effectively, there's no single point of failure. So yeah, we were very much focused on the banks to enable them to get into the space. So that was really the main approach. So I think before you think, there's a lot of talk. You look at World Economic Forum, they talk about 5 to 10 years from now, there's going to be $24 trillion of assets tokenized. But you can't do any of that unless you have the foundational infrastructure, which is basically the custody element. So really key management. Maybe you don't manage the private key related to these assets. Because as you know, if you control that, effectively this space is all about bearer assets. If you control the private key, you control the asset. But it's not just about stealing the key, it's just access to this key. So fundamental to what we do is really not just custody, and I think it's really Genesis custody. It's really grown into much more of an operating system for so how you can securely manage everything you do in the digital asset space. We can dive into that, but that's really the biggest issue now, because as the space grows, there's many things you need to connect to. And not one company is going to do everything, but you need a way to basically interface to kind of enter the system. And then you also need a kind of core foundation, which is custody.
Yeah, and private key security is huge. And I've heard from many people that institutions take that part, the most seriously, because they're potentially dealing with, hundreds of millions, potentially billions of dollars in crypto or digital assets, or things are tokenized in the near future. What type of security infrastructure specifically are they looking for that you guys are providing?
Well, I think there's a lot of dogma in this space. So we started out as a company. We're a software technology company, but typically the way you deploy the solution is really, I think banks have a history of being very comfortable with what they call hardware-based security. So they have things like HSMs, which is, imagine the concept of an onion base. You just have additional layers of security, and hardware is one element of that. So that's just traditionally that's how we launched our business, and that's really where the banks are most comfortable with hardware security. Now, there's also this notion of there's a lot of, let's say, new innovation in the space, because I think, as you'll be aware, it's a very fast-moving pace, both in terms of what's happening broadly in the market and the technology that supports it. There's solutions in the market called multi-party computing solutions. So effectively, just you can have an all-software math solution around storing keys as well. So we started in the hardware space, but we realized that there are use cases for hardware and there's use cases for multi-party computing. And then they're not totally, I think the potentially need to operate both. So although we started on one side of, let's say, this very dogmatic debate, because the hardware guys will say multi-party, all software is not secure enough, and the software guys will say, well, hardware is not agile enough, and you don't need hardware anymore, it's tough to manage. Well, we don't really anymore have that sort of dogma, because when we talk to large banks, there's different use cases for each. So our solution is really about being interoperable with both of those, but being able to provide basically a secure framework for managing wallets, managing position keeping, managing interfacing with multiple ledgers, public and permission ledgers with a real focus on public. Having a framework for things like tokenization, and really being able, I think, fundamentally being able to fit and to be eventually completely behind a bank's core infrastructure. I mean, ultimately, we want to be able to support is, let's call it the Apple moment for a bank, that the bank doesn't really have to care about managing the complexity of keys. It's all abstracted behind their own infrastructure, and it's seamless and secure and highly scalable.
Is it just the banks that are your main customers? Or are you seeing interest from other institutional players that want the same level of security infrastructure?
No, it's not. I mean, I would say our focus has been the banks. We decided this is the market we wanted to start on. I'm
Mhm.
not, good or bad, I'm not sure. It's the toughest nut to crack, basically, because onboarding to a bank is not just signing up on a website. You're talking about an exercise that can last beyond a year in terms of getting through all the compliance and onboarding requirements. But we decided to start on that side of the business. Decided that these are the very big players that need basically solutions, so they need something scalable. And I think it's proved to be fairly the right strategy. I think we're unique and focused in that space. We've had very good traction. I think some of our clients are public firms like Standard Chartered Bank. Northern Trust is now using our infrastructure. We work with a number of core infrastructure providers as well, so core banking software providers that support banks. So Avaloq is a system very not used in the US, but very popular in Western Europe, Switzerland, Southeast Asia. But 150 banks on that platform. So they have a turnkey solution, which is our silo solution. So they don't need to know anything about but about managing cryptocurrencies, and it's all abstracted by the core banking. So yeah, we've targeted the large banks. But the large banks, the way we work with them is we license their technology. It's deployed on their premises, and they manage it. So that is not for everybody, because not everybody. There's a general trend towards cloud. There's a general trend towards SaaS, outsourcing technology in general, and we've responded to that. So all our clients up to now have been these kind of large institutions that manage their own stack, and now in Q2 of this year, we'll be launching a managed service, so software as a service. So you can get our silo product, the same product that tier one, tier two banks, exchanges, and infrastructure providers have been using since 2018. We can go all the way down the value chain in terms of size of firm, and effectively accessible to any institution. So I think it's not so much who do we want to serve. Before, our product was really designed for large institutions. Now we've adapted it so we can serve the whole market.
So would you say that this is pretty indicative of financial institutions wanting to buy into this industry, or is this more of like a big learning step for them?
I think 20 post the, let's say, crypto winter, so 2018, 2019 was the learning stage. Banks were experimenting. They had innovation departments that really had experiments with no particular purpose in the end other than experiment themselves. So it was the era of the proof of concept. We've gone past that. I think largely because there were some key pioneering institutions. I'd say one of our partners, for example, Avaloq, the founder of that company basically in 2018 decided this was something going to be strategic, and decided to integrate it into their core banking software long before there was probably client demand, long before it was probably commercially viable. Same sort of stage that Fidelity got in the space. So there's some sort of early pioneers. They started to get traction. I think that the way banking works, or large financial institutions work, is there's obviously the pioneering stage, and then there's the fast followers, and we're past the fast followers now. We have a lot of people trying to catch up, because there's actually a lot of commercial traction in the space. So what's driving the business now is pioneers took a risk, fast followers follow them, because you don't want your competitors get too far ahead. Now the thing, you have many different types of investors, whether asset managers, fund managers, high net worth individuals, corporations, think about MicroStrategy in the US, all talking to their financial institutions, their banks, asking them, are they going to service them in this new asset class? So that ultimately is how you get broad sort of interest and adoption by the institutional market, because if they don't do it, they're going to lose business. And I think, look at basically, we're based in Europe. Our primary focus has been, let's say, Europe and Southeast Asia. Look at the banks in Europe. They're the market cap of the banks. I mean, you're talking about many of the banks have their market cap is not too far off the crisis lows from 2008. Meanwhile, you're going to see Coinbase potentially issue in the US, or IPO rather, somewhere between 50 and 70 billion. All the assets they manage have come from the banks. This is a huge opportunity that they're waking up, that this is really have a material impact both on the bottom line and market cap. So I'd say there's a wall of institutions getting into the space now.
Is METACO a US company, Euro company? Like, where is it domiciled?
We're domiciled in Switzerland. And I would say basically our clients, we have a global client footprint. And
Mhm.
the way we've built the client business is not so much that we go to markets and try to push the product, because we're dealing with regulated institutions. The prerequisite for a market to open for us is that the regulator there has to be supportive of their regulated banks to get involved.
Mhm.
So that means they really need to define the space, define a taxonomy of these different asset classes, how they're treated. So the banks don't feel it's a gray area. They need to have pretty much regulatory certainty to get involved. So Switzerland was one of the leaders in that space. The regulator here, which is called FINMA, basically really saw this as an opportunity for innovation in the economy, and a way to reinvigorate the banking system. So they've very much been a leader. Places like Singapore, MAS,
Mhm.
similarly followed quick after. And in Europe, we've seen Germany. BaFin is the regulator there. They've been kind of the leader in the European markets, and now broader Europe is looking to harmonize those rules across Europe. So for us, there's been a it's really about regulation. So when people say they don't want regulation in the space, well, we deal with institutions that won't move if they don't have regulation. And in the end, the on ramps and off ramps to finance are at the moment largely through regulated institutions. So when the regulators support the space, we get clients in those markets. So we are very strong in places like Switzerland, Germany, Singapore, and we're starting to get good traction in the US because you're starting to get regulatory clarity in the US as
Mhm.
well.
Yeah, I was gonna say in the U.S. we got the OCC that kind of opened the doors in the last year to let banks, kind of start exploring this and developing products and services. And I think Biden just froze the proposed rules from FinCEN or whatever on regulations as well. So
Correct.
it's opening up very quickly in the U.S. Is it similar in Europe, or is it like by country? Because I'm not quite sure how the banking system works there compared to the US when it comes to crypto. So is it different
Well,
in Germany versus Switzerland, or is it like the EU got its own thing for it?
yeah, well, definitely Switzerland's outside of Europe, so it is different here. But I think there's been some front runners, let's say, in Europe. But Europe does work on kind of passporting regulatory regime, meaning if you're able to operate in one country, you can typically take that sort of regulatory approval and operate in other countries within the EU. So in this space, Germany, within Europe, Germany has really been a leader in this space. And
Mhm.
the EU is now looking to basically effectively harmonize those rules across every other member country in Europe. So there's been a leader, but I think the idea is really to have consistent rules across the region. So companies can, for example, set up in Liechtenstein, which is also very progressive sort of legislation similar to Switzerland, if not even more advanced. They can set up in Switzerland and then service clients in the different regions. It's not actually at that stage just yet. Now we have kind of siloed country regulation, but there's an intense effort now to harmonize those rules across Europe.
Gotcha. Well, yeah, it seems interesting. It's going to be fun to watch some of this stuff play out and develop, especially with the banking system over this year and next few years. Pivoting away from METACO for a minute, just to ask more of a fun question. So I was stalking you, trying to do research, trying to learn a bit more
Great.
about you. And I think I found your Twitter, and it said in your bio, gold and Bitcoin are money and everything else is credit, which I generally agree with. So my question was, because I mean, you mentioned gold earlier, so you have a bit of a background there as well. Do you think gold is going to hold on to that label, being labeled as money, the same way Bitcoin is starting to take over that label, as younger generations shift into Bitcoin in a more digital age? Do you think, I guess my question is, do you think gold is going to slowly become more irrelevant, or do you think it's going to stick around?
Well, as bullish as I am, Bitcoin, it's still got a relatively young track record, whereas gold's been recognized as a store of value for thousands of years.
Hmm.
So I don't think it's going to go from 100 to zero or suddenly that nobody will recognize it. And I think there's definitely a generational interest, a generational, say, preference rather in places like North America. But generally, North Americans are not big investors in the gold markets. Where you can go to places like Asia, and but in places like India, China, and most of Asia, it's effectively a second currency, and it's really viewed as a check on their own central bank's currency, because a lot of these regimes have gone through a lot of currency devaluation, and the only way to protect your assets has been a hard asset like gold. So you can go, if you travel through Asia, you'll always find basically there's gold markets. You can walk in and there's a traded two-way price in a lot of these places, and people may buy jewelry to wear gold,
Hmm.
but to invest in gold rather, but jewelry in Asia is 24 carats, so it's pure gold, so it's very negotiable. So it's a very different approach to gold than the West, where there's really not much allocation, even at the institutional level. So I think gold's not going to go away anytime soon. It's it's a 10 to 12 trillion dollar market, so it's got a very big market cap. But I think there's no question that when you look at gold, there's certain properties. The one that's it's as Greenspan, who former Fed chairman, said before he became governor, gold is one of the few ways you can basically protect yourself against the system. You can exit the system. And we saw Christian Lagarde, the head of the ECB, just say that same thing about 2 weeks ago, that things like Bitcoin is a potential exit of the system. So there's definitely a lot of comparables that are, or let's say, properties that are very positive, very strong on both of them. But I think the advantage of gold is still a physical asset, and the storage of it's very centralized. So there's some weaknesses, and I think the fact that there's clearly it's not a scarce asset. It's just scarce at a particular price, but as the price rises, there's more of it, basically, because more becomes economically viable to mine. Bitcoin has properties of absolute scarcity, and it's gold 2.0, that you can teleport across the world instantly, right? It's it's native internet money. So this is something that I think is underappreciated by particularly the older generation. I'd say my generation and older. But I think I was kind of predisposed to the space because I think in the early part of the 2000s, let's say, I started getting very interested in the gold market, and when other central banks were divesting, I started buying. I've been a long-term investor in the space, but I see now that there's potentially a better opportunity. So I think you're supposed to use both. I mean, we're going through extreme experimental monetary policy in every country on earth, and we don't know how that ends, but we do know that there's a lot more of the fiat money. You look at M2 in the US, how it's skyrocketed. You need a hedge. You need a way to opt out of the system, because it could go horribly wrong in some ways.
Well, yeah, it definitely could go horribly wrong at any point in time. Do you think gold is underappreciated by the younger generations coming into these markets?
Well, I mean, I think they appreciate the properties, but they see better properties in Bitcoin. So I wouldn't necessarily say you're supposed to, that you have to hold gold if your preference is Bitcoin. I think Bitcoin is a fantastic investment, and I think it's one of the best investments of our lifetime. I think the risks to it are incredibly asymmetric, and there's space for, just because it could converge with the value of gold. I don't think necessarily gold goes to zero. So, and I think that's just the first step for the first step for the valuation of Bitcoin. So I don't think it's an either or, but I think if you have to choose one, particularly in the West, you would choose Bitcoin.
One more fun question, and then we'll start wrapping it up, because I feel like it's criminal not to mention this given what's going on in the markets. Okay. What are your thoughts on Wall Street bets? This whole retail versus hedge fund battle that's going on in the stock market. It shows how broken and corrupted, traditional finances, the stock market is in a lot of ways. Do you think in the end, it bodes well and helps promote potential crypto solutions and companies that can, solve a lot of these solutions or problems?
Man, I agree. There's no doubt it's a demonstration that things are broken. I mean, it's probably a demonstration of many things. People are, frustrated, stay locked at home. You got nothing to do. So they get a stimulus check. You might as well put it in the casino that has better odds than a regular casino. So be in the market. But I mean, I think there's been structurally a lot of problems in the market for a long time. When you have hedge funds buying all the flows from some of the brokers in the U.S. And why do they buy it? Because they can front run those flows. So it's not exactly been a fair market. And I think there's no doubt that you look at the crypto space, it's about leveling that field so no one has a particular advantage. Now, of course, like any asset, there's going to be incentives for people to game the system as much as they can. But I think the structural disadvantages should go away to a large degree. We don't need these let's call them toll keepers that basically collect tolls just for being there as trusted institutions. And we can see not all of them really have earned that trust. So it's just effectively a tax on our system. So I find it ironic that everyone's complaining that these, all these, Reddit sort of Reddit groups are now, pushing around the hedge funds. The hedge funds are complaining they're losing. I mean, it's turning the tables. But I do agree. This is a sign that the system as we know it, or basically the market speculations, probably also reaching an excessive point. And we do need a system that's much fairer than we have right now.
Yeah, it's been quite an interesting week or so watching all that happen, and it feels almost like a statement from the little guy in the world that's investing
Absolutely.
too. Anyways, what's the roadmap look like for METACO, going into 2021? Are you guys just going to keep developing out Silo, or do you have plans for other projects, or like what's the general plan?
I mean, I think, as I mentioned earlier, I think we've focused on a particular space for the large financial institutions, and we realize now that, just as we described, the market's a little bit broken. The existing system is, look at the existing technology stack banks have. It's pretty much a spaghetti system that's been built over 20 to 40 years. There's an opportunity to reinvent the kind of financial stack that institutions need. And core to that is really the kind of end-to-end security around that. How do you interact with, what's a secure orchestration layer across the entire financial system, a new financial system, which is digital assets, crypto assets. And that's what really can deliver. So it's really about having the most flexible solution. We don't know, as a practitioner in the space, it's very hard to know, which are the right ways to go. So you need something highly flexible, because there's new technologies that are coming out, it seems every day when you watch the space. So we really want to be the foundation for how a firm builds their digital stack, and really keep them future-proof from that because of its kind of flexibility and scalability. So that's all our solutions are focused on that going forward.
Well, Seamus, thanks for taking the time to come on the podcast and, help elaborate on what METACO is, what you guys are doing in terms of, the financial side of things in this industry. I know that's very important and educational for a lot of people. It's such an important area. It's growing so rapidly. So yeah, thank you for taking the time. Come on and talk about all that, and really appreciate it.
Great to be here, Brandon. Thanks a lot.